Hey, hello guys, how are you doing? This is Swanati. Let's start the video with our motto winning is a choice and we choose to win always. Today we are going to see the book review Think and Trade Like a Champion by Mark Minnervini. Mark Minnervini made 155 percentage annual profit in US and won the champion traders championship title. So previously the record was 119 percentage profit per annum. So he made 155 percentage profit per annum. So how he made it? He followed a process, right? So about his process, how he trains his mind, those things he is explaining in this book. And do you how long it took him to be a profitable trader, you think? Can you guess? 3 years, 4 years? It's 6 years. So it took 6 years, trading years, for Mark Minervini to become a profitable trader. In his book, he stressed the point that mindset is the most important asset for a trader. The first thing he says is like you should have a belief about your abilities. Unless you believe in the abilities you have, you can't succeed in trading. And before once you entered into the trading, quitting is not an option. So, if you have that mindset, I won't quit, I will improve step by step, and I will become a consistent and profitable trader, then you can make it. So, to become a consistent profitable trader, you should come out of your comfort zone. And always remember, people have dreams, but most of them don't take any action. And if they take action also, most people won't have a commitment on it. So to become a successful trader, you should commit yourself and take action towards trading by continuously improving yourself. So the first thing, important thing is, before trading, you should have a trading plan. Always do your homework on the previous day night or in the morning before market opens, and have a trading plan about whatever the market does. You should always have a plan about your entry, exit, and stop. And don't take any trade unless it gives at least 1 is to 1 profit ratio. Like if you are gaining 2 rupees, means the stop loss should be 2 rupees only, at least. That is the minimum amount he is saying. For gaining 2 rupees, you should not have a stop loss of 6 rupees. Okay, so at least you should have 1 is to 1 risk reward ratio. And then instead of trying different styles like a breakout trade, momentum trade, or trading in indexes, then switching to stocks, and trading in one strategy, then trading in another strategy, don't jump from one thing to another. Focus on a particular style. And then when you are making profit, and when there is strength in the trend, hold the trade and trial, because when the trend is strong, the stock movement will be more big. And then this is an example about like how you have to select a stock. The price always moves from the place A to place B, but how it moves is important. Like see, in the second then the first second the first chart is like from A to B. When the price is moving, it goes down long before recovering and goes up. But at same time, compare the chart marked as 2. Here the price falls below the entry, but slight fall only. It's not going very deeply, or it is not at all nearing the stop, right? So when you are comparing how the stocks are moving, you should select the stock which has some uh, good movement, instead of giving spikes and all. Like when you are comparing 1 and 2, 2 is the best. So like that you have to choose the stocks you are trading. And then always you have to trial your stop and profit. And when you have stopped out of the trade, let's say you are entering but you have your stop got hit, then in your trading plan you should have a plan about where to re-enter on that particular stock. Okay, so re-entry also you have to plan. And then always cut the losses when it is very small, because huge loss starts small, but instead of cutting our losses, the traders keep on going, and the small loss becomes huge. So always cut the um, losses small. And then you have to record your trades, like why you are taking the trade, where you are entering, where you are placing stop, and then where you are keeping your target, and then how you are trailing your stop and also your targets. That is how you are protecting your trades. So you have to record all these details and review it, so that you will know how many trades you are winners and how many trades are losers. And also the winning percentage should be more and losing percentage should be less. Similarly, the winning trades should give you more profit, and losing trades should lose only small percentage only, not a huge loss. You should not get huge loss, because Mark Minnervini stresses the point of one, at least 1:1 minimum requirement to enter a trade. Okay, and then always go with the trend, not against it. Like some people always have a thought, like when the price is nearing the resistance, without thinking too much they will go short, right? So don't go against the trend, always follow the trend. Then always the trader's mind will be having the two emotions, like unable to make any decision and also regret. Like when if you are trading, let's say you are trading without any trading plan, you don't have any idea about where to take entry, stop loss or targets. So that time, when if the stock or index is giving movement, you will be unable to make any decision whether to buy or sell, or simply watch. Like that you can't decide what to do. And because of that emotion and confusion, after the stock gives movement, the trader will feel regret, like I have missed the big movement, I have missed so much profit. Like that they will have the regret. So uh, instead of giving excuses, always have a plan and follow it. There are two possibilities only. You can make money or you can make excuses. So it's your choice about whether you are choosing money or excuses. And then always take full responsibility towards your trade, because taking full responsibility gives you confident feeling, right? So always take full responsibility towards your trading and also towards your life. Okay, so that nobody can control you. And then don't force trades. This is the biggest mistake. Like when the market is opening, no, sometimes the trend will gain strength slowly. Some days are like that. So if some people will be having feeling like okay, market has opened and it's already 9:35, 9:40, I haven't taken any trade. Like that they will think, and they will take a trade without any proper technical things, without any technical reason. They will take trade which result in losses. So don't force your trades. Wait for the trade setup to form. Wait for your as per the your trading strategy, the trade setup should form. Whether what time it is forming doesn't matter. So you have to wait, and you should not force your trades. And then when the market is moving as per your plan, you have to trial, and you have to hold the trade to make big profit. And when when the market is not moving as your plan and the price is moving against you, take small losses and come out of the trade. And then Mark Minnervini explains using charts about how and when to buy stocks. He talks about how the price is consolidating before giving any breakout, and then once it reaches the highest point, then the sellers how they are coming and the price is falling. He uses few examples and explains it with chart. And then to become a consistent trader, you should learn how to protect your profit. So he is giving huge importance to protecting your profit. And then the traders usually have three traps. Like the first thing is emotion. Because of emotions, traders do irrational things which gives losses. And then because of forming opinions about the market or price movement or about particular stock, they take what to say, without any technical things, simply by having the opinion they take trades and lose money. And also by the ego. What is ego? Unable to understand what mistakes we are making, and unable to correct it. Ego won't to correct their mistake, right? So traders trap is these three things: emotions, opinions, and ego, and you have to avoid it to become successful. So then after that, he is talking about visualization, breathe, steady breathe, meditation, etc. So that's all for today. This is Vanati signing off. Remember, you can trade better than you think.